All right, welcome everybody. Welcome to the Flora Growth 2022 conference call. My name is Jessie Kasner. I am the Chief Marketing Officer at Flora. Please note this conference call is going to be recorded and will be published for viewing shortly after the end of this meeting. Following the initial formal remarks, we will conduct a question and answer session. All participants can submit questions via the chat and Q&A function in the webcast. Further instructions will be provided as the Q&A begins. On the call with me today are Luis Merchan, President, Chief Executive Officer, and Chairman of the Board. We have Jason Warnock, Chief Commercial Officer. We have Dr. Annabelle Manello Morgan, member of our board and lead scientific advisor, and our newly appointed Chief Financial Officer, Elshad Gariev. Today, we'll be discussing the results for the first half of 2022. This afternoon, our unaudited financial statements for the 6 months ended June 30th, 2022 were filed with the SEC under the cover of a Form 6F, and we disseminated our earnings release. Copies of both of those can be found in the Investor Relations section on our website and on EDGAR. I'd like to remind you that during the call, management's prepared remarks may contain forward-looking statements which are subject to risks and uncertainties. Likewise, management may make additional forward-looking statements during the Q&A session, which are also subject to risks and uncertainties. Forward-looking statements don't guarantee future performance, and therefore undue reliance shouldn't be placed upon them. For detailed description of the factors that could cause our actual results or business to differ materially from any forward-looking statements made, please see our Form 20F filed with the SEC on May 9th, 2022. The company undertakes no obligation to publicly correct or update the forward-looking statements made during the presentation to reflect future events or circumstances, except as they may be required under applicable securities law. And finally, please note, on the call today, management will refer to non-IFRS financial measurements, such as adjusted EBITDA and adjusted EBITDA margin, in which Flora excludes certain expenses from its IFRS financial results. At this time, it is my pleasure to introduce Flora Growth President, Chief Executive Officer, and Chairman of the Board, Luis Merchan. Luis?
Thank you, Jessie, for the introduction. Hello, everyone. Welcome to our first half 2022 earnings call. We appreciate the time you have all taken to be here with us. I am excited to report to you that we have had a very successful first half. Our sales are up 604% over the same period last year. Our gross profit increased 547% over that same period last year, and we expect our revenues for the full year to grow between 300 and 400% for the full year 2022, reiterating our guidance. As we have all seen, market dynamics, both in the broader US equity market and in the cannabis sector, have been challenging for many businesses. The fear of inflation, the value of the dollar, lag effects of the pandemic, and supply chain disruptions have compounding effects that are still being realized today. Despite this challenging backdrop, Flora business units continue to improve their performance and make significant progress. In times like this, it is critical that we carefully evaluate every decision we make to ensure the correct balance of growth and profitability. During the first half of 2022, we saw immensely positive news coming from Colombia, including the legalization of dry flower exports, the election of a pro-cannabis administration, and the addition of cannabis as a fully covered medicine through government-sponsored healthcare. These regulatory movements in Colombia, coupled with our focus on operational discipline, has meant 2022 is proven to be a year of tremendous growth for our business. This has been the first half of realizing the full potential of our updated growth strategy. This strategy is categorized in 3 pillars: commercial wholesale, house of brands, and life sciences. Each of these pillars will be discussed later in the presentation. In the first 6 months of the year, we have finalized the build-out of our cultivation facility and received our 43-ton quota for high THC cannabis export from the Colombian government. We acquired a leading CPG brand in Just CBD and have fully integrated the company into our business operations. And we have developed a clear and revenue-generating strategy for our life sciences pillar, including pursuing clinical trials in the UK. All of these milestones have been reached while simultaneously building a global supply chain and distribution networks. With that, we'll review Flora's financial performance. And for this, I'll hand it over to our new Chief Financial Officer, Elshad Gorayev.
Thank you, Louis. Revenue for the first half of 22 came in at 14.9 million. This represents an increase over 604% versus the same period last year, and more than double for the second half of 2021. The revenue was predominantly driven by 4 months of revenue contribution from Just CBD and full 6 months from Vessel. Revenue from Flora Lab and other brands outside of Just CBD and Vessel contributed 12% of the overall revenue, as Flora made a tactical decision to emphasize North American market penetration and the development of new brands requiring a build of inventory for the back half of 2022. Inventories now sit at $93 million, which we expect to sell through the coming months. Gross profit increased to approximately $7 million, up 547% compared to the first half of 2021, 363% compared to the second half of 2021. This was attributed to higher gross margin profiles in most of our business lines, including our white label operations, Flora Lab 2, and reduced focus on low margin food category. Our house of brands supported a gross profit of 43%, which expected to continue climbing in the second half, and our Flora Labs 1 through 4 had a blended gross profit over 54%. Operating expenses increased to 37.7 million compared to 6.1 million in the first half of 2021 and 15.2 million in the second half of 2021, driven by the integration of the Vessel of Just CBD, resulting in higher payroll, consulting, management fees, share-based compensation, promotion, and an impairment charge. Subsequently, costs remain controlled despite the doubling revenue, as consulting and management fees were up only 3.6%, while professional fees were down 40%. G&A, including promotional expenses, increased 136% with the acquisition of Just CBD, as well as promotional activities associated with the business and Vessel. Other expense items included many that were one-time in nature and some non-cash based items. This one-time expense items totaled $5.3 million of the operating expenses in the first half of the year. Due to external market forces, predominantly steep decline in sector valuations and the use of higher discount rate, we recognize a goodwill impairment of $16 million in the first half of 2022 related to our acquisition of the Vessel. We included a write-down of $1.3 million on our investment in Hoshi due to similar market contractions on valuations. Backing out of impairment and the write-downs, Hoshi investment and non-cash items and one-time items resulted in an adjusted EBITDA loss of $82 million for first half of 2022. We continue to expect improving adjusted EBITDA going forward. For full definition of adjusted EBITDA as a non-IFRS measure, please refer to our filing made today with SEC. Net loss for the first half was $32.7 million compared to $5.1 million for the first half of 2021 and $16.2 million in the second half of 2021. Flora currently has 76.9 million shares outstanding, resulting in an EPS loss of the half of 42 cents. On June 16, we announced that our board of directors had authorized a share purchase program up to $5 million. Subsequent to June 30th, company has repurchased an aggregate of 365,645 shares, which commenced on July. Flora make purchases opportunistically and in accordance with buyback rules set out by the SEC and NASDAQ exchange. Turning to the balance sheet, cash change from 2021 year end of $37.6 million to $10.3 million of cash on June 30th, 2022. Cash raised from our Q4 2021 secondary offering in November was $34.5 million, with $16 million of that was used to acquire Just CBD. Cash was also utilized to build inventory for the launch of series of new products from Vessel, Just CBD, as well as additional brands to be launched this year. Company remains debt-free. Given broader market conditions, and we made a tactical decision to diligently manage our cash position, streamline operating expenses to lower cash burn. With anticipated increase in sales from our commercial sales of cannabis beginning shortly, we believe we have the liquidity we need to reach profitability, positive cash flow next year without capital injection. It's important to note that we have no major CapEx remaining for the year. We already made a completed nearly all our capital projects. We exited a period of investment, and now we're entering a period of execution. We look forward to delivering our strong growth objectives for the second half, led by our house of brands, along with continued growth in our Colombian cultivation and lab operations. I will turn back to Louis to discuss our operational highlights.
Thank you, Elshad. In addition to our financial results, we also accomplished a number of major operational milestones in the first half of the year, many of which were focused on investment in human capital and expanding our global footprint. Most notably, in the first half, we acquired 100% of Just CBD. This acquisition instantly provided us access to 14,000 points of distribution and 300,000 customers, in addition to a robust portfolio of products. Another acquisition was of the CBD brand Masaya. Masaya boasts patent-pending, science-backed, high-potency formulations and will expand our life sciences offering. Moving forward, Flora will continue to expand through organic growth and evaluate M&A opportunities. With continued consolidation in the industry, we're always looking for opportunities that are accretive in nature, not just from a financial perspective, but through our capabilities and human capital lens as well. Following our 2020 acquisition of Vessel, we appointed James Cho as Chief Strategy Officer and Jesse Kasner as Chief Marketing Officer, both having joined our company via the acquisition. We also appointed new members of the leadership team, including Florida's former Director of Cannabis, Holly Bell, as Vice President of Regulatory Affairs, and Elshad Garayev, who now serves as Flora's Chief Financial Officer. To our board of directors, we appointed Tim Leslie, former Leafly CEO and Amazon executive, Brandon Konigsberg, former senior executive from JP Morgan Chase. Internationally, we have expanded our footprint to include an office and distribution center in London. And additionally, we have increased our European market penetration by securing listing approval on Amazon UK for our Just CBD portfolio. Opening brick and mortar stores via partnership in Czech Republic and Germany, and securing multi-country distribution partnerships. Throughout the first half of this year, Flora also secured international distribution agreements for our Mind Naturals line, which can now be purchased in Mexico and Hong Kong. Flora expanded its presence in Canada through Vessel, which launched its direct-to-consumer business in the country in May of this year. In Bucaramanga, Colombia, we completed the build-out of our all-outdoor cultivation and on-site extraction facility, producing distillates and isolates using flower grown at our outdoor operation. Flora Growth also reorganized our laboratory facilities, which now include Flora Lab 1, our cannabis processing and extraction facility located on our farm in Bucaramanga. Flora Lab 2, a GMP processing facility for cannabis and non-cannabis topicals, phytotherapeutics, and over-the-counter products in Bogota. Flora Lab 3, a cannabis transformation facility for edibles and other cannabis derivatives in Fort Lauderdale, Florida. And Flora Lab 4, a custom formulations lab for cannabis prescriptions in Bogota, Colombia. I want to hand it over to our Chief Commercial Officer, Jason Warnock, to elaborate on our lab and cultivation infrastructure.
Good afternoon. Thank you, Luis. Again, good afternoon, everyone. As Luis just mentioned, 2022 has gotten off to a great start for our 100-hectare licensed cultivation and operation facility in Bucaramanga, Colombia. While we've had infrastructure there for some time, the complete build-out of the state-of-the-art facilities wasn't truly realized until the first half of this year. Additionally, the people and expertise necessary to scale a fully functional cultivation facility able to handle our full 43-ton THC quota, as well as the high CBD products we cultivate there. As we look back at the beginning of the year, we saw many regulatory milestones achieved, but delays in the passage of several government regulations, specifically as it pertains to the export of high THC flower, meant our ability to put plants in the ground and begin realizing revenues from this channel were prohibited before April 1st of this year. Subsequently, the proper framework has now been put in place, and given the date of our quota issuance, the regulatory checklist, and of course the time it takes to grow the plant, we are proud to say that we are now fully commercial harvests are now coming online. August being the very first month, technically any cultivator of a newly issued psychoactive dry flower export quota could expect to pull plants from the ground. Today, I'm so happy to say we're growing 3 hectares of non-psychoactive cannabis and 5 hectares of psychoactive cannabis, leveraging our perpetual harvesting method afforded to us because of the geo-advantageous nature of our location. Through Flora Lab 1, the facility there, we are able to process both high THC and high CBD flower, as well as extracting distillate and isolate products for the global export, as well for use in Flora's own product supply chain. Our Flora Lab 1 facility currently has the capacity to process and extract 3,500 kilograms per month, positioning us well to meet the current as well as future demands. We have begun the process now of commercial exports and continue to export activities to the US, Israel, Germany, and Australia in the coming months. Our ability to realize full activation of this channel so quickly has been a testament to the Flora team, as well as our tight partnership with regulatory partners. Beyond our farm, our commercial business includes Flora Labs 2 and 3, which serve as the formulation and finished goods operations, respectively. Flora Lab 2, located in Bogota, Colombia, holds 3 critical GMP certifications for cosmetics, phytotherapeutics, and dietary supplements, positioning it well to grow within the Flora product portfolio, as well as to the broader market via white label capabilities. Flora Lab 3 in Fort Lauderdale supports the production of Flora's consumable product offering, while additionally offering white label solutions to third parties in the United States and beyond. The integration of these 3 labs into the Flora supply chain not only provides compounding value creation at every step, they also provide a stable resource in terms of supply chain and cost management. Additionally, white label business in both locations is projected to grow and drive revenues through 2022 and beyond. I'd like to pass it now over to Jesse Kasner, our Chief Marketing Officer, to discuss the House of Brands.
Thanks, Jason. Since its inception, a brand collective has been a part of the Flora promise. In fact, the first revenues realized by Flora were through Mind Naturals, our skincare line. And since then, Flora has grown to house multiple brands, each delivering a better plant-based experience in its own unique way. The value of Flora's house of brands is now truly being realized in 2022. Brands allow us to enter nearly any target market, regardless of the legal status of cannabis or its derivatives, because of the diversity of our product offering. This means that we can begin to build customer base, distribution networks, and supply chains in regions in advance of movement on cannabis regulations, affording us a revenue-generating infrastructure that positions us for the future. Additionally, fast lead times and healthy margins commensurate with direct-to-consumer and wholesale businesses provide the company with meaningful revenue as our other pillars begin to ramp up. You can see the strategy come to life as we expand our market penetration from 4 countries in 2021 to more than 10 countries by the end of this year. The percentage of revenue contribution from international sales was roughly 3% of total revenue in the first half, and we expect this number to grow exponentially as we deploy new products into these nascent markets. In the first half of this year, roughly 85% of Flora revenues were driven by the House of Brands division, with the majority being attributed to acquired assets, Just CBD and Vessel. As a part of realizing the full potential of our newly acquired business units, in the first half, we focused intently on integration. We identified and began implementing cross-brand synergies from a sales and operations perspective. We have and will continue to take advantage of logistics efficiencies through single location warehousing and combined shipping operations, as well as amplifying revenue generating opportunities, given each company's core competencies and channel distribution via cross-selling and co-branded product. In addition to integration activities, the first half saw new product launches and category expansion across all brands. Just CBD expanded its offering to address the hyper-growth alternative cannabinoid category with novel and proprietary blends of CBD and alternative cannabinoids in both consumables and vape products. Vessel has continued to expand its dry herb line, which represents about 16% of its overall sales in the first half, but we saw a 32% increase of category sales quarter over quarter Q1 to Q2, so really promising. Vessel also expanded into the previously untapped smoke shop retail channel, driven primarily by Just CBD's relationships in that industry. Mind Skincare concepted and formulated and brought to market a new line of non-cannabinoid based skincare, its Roots line, which we expect to provide greater access to some global markets and big box retail where CBD infused products have higher barriers to entry or no adoption at all. Stardog, our hemp-based apparel line, launched a new line of sustainable sneakers and loungewear and will seek to expand its offering into accessories in the future. Mambe, the food and beverage brand in the portfolio, has evolved its offering to meet the demands of the market and continues to capture market share in South America. In preparation for the back half of the year, where we expect to increase revenue for all brands given the demands of holiday shopping, we've significantly increased our inventory position to $9.3 million in order to mitigate the impacts of potential supply chain challenges and slowdowns. We expect to convert to cash the majority of this inventory before the end of the year. Now, among all of these brands, we still believe there's an opportunity to better address segments of the plant-based market. And so in the back half of the year, you will see internally incubated brands brought to market, such as the Tonino Lamborghini CBD beverages, a plant-based wellness brand featuring ready-to-mix drinks and dietary supplements, and a new alternative cannabinoid brand. As we continue to be disciplined in our curation of our brand portfolio, we fail fast and we double down on our successes. As a part of this commitment, we've chosen to sunset products or brands within the portfolio in order to better support the long-term viability of the company. Discontinued products are often rolled into white label or business-to-business offerings. We're pleased with the performance of our house of brands to date, and we expect this pillar to continue to drive meaningful revenue and provide a pathway to global expansion. All right, I'll now pass it over to Dr. Annabelle to update us on the progress achieved in life sciences.
Thank you, Jessie. Life sciences is the newest pillar to our growth strategy, and in the short time that we've been working on our research and formulation development program, we have achieved 3 major milestones. First, we have moved assertively through our preclinical research, data, and protocol submission for our clinical trials taking place in the UK in partnership with the University of Manchester. And now we await final approval from the National Health Service. We expect to be inpatient and start these trials before the end of the year. Second, we have acquired science-backed high-potency CBD brand Messiah. We are pleased to announce the original Messiah formulation has been submitted as the product for use in our clinical trial in the UK. Messiah provides a path to claims-based, clinical-grade consumer product and access to both domestic and global distribution, which makes this brand a compelling cornerstone of the Flora Life Sciences pillar. And finally, our third milestone was the breaking ground of our updated custom formulation lab in Bogota, Colombia, also known as Flora Lab 4. In this lab, we will be licensed to formulate prescription cannabis and other medicines in Colombia, all of which are required to be covered by Colombian health insurance providers. These achievements position this division well to deliver on the promise of better access to plant-based medicines all around the world. Thank you, and I'll pass it back to you, Luis.
Thank you, Dr. Annabelle. Before we open up to the Q&A portion of today's call, I want to thank everyone again for attending the 2022 attending this call. 2022 has been and will continue to be a formative year of our growing strategy. Despite some aforementioned macro headwinds, the challenges in the capital markets, and volatility in the cannabis sector, I am proud of how we have executed the first half of this year. We have been steadfast in our fiscal responsibility, having strategically deployed our cash resources in a way that creates returns while positioning us for continued growth. We expanded our bench of talent with world-class leaders and operators, and while simultaneously broadening our global reach. We continue to invest in the necessary infrastructure of our cultivation and commercial pillar, which up until this point had been in development. We're now able to realize the value of that investment heading into the second half of 2022 and into 2023. And with the activation of this pillar, we are now one of only a handful of companies who are actively moving cannabis-derived products across the globe. We expect that flow of goods to increase substantially in the coming months as we continue to build relationships with regulatory agencies in the governments around the world. Our House of Brands pillar highlights one of our greatest value propositions, given the experience of our leadership team in brand building and product distribution. We have grown our House of Brands and continue to offer new and best-selling SKUs in high-impact customer segments to customers around the world seeking better plant-based experiences. And in life sciences, we are just beginning to unlock the full potential of cannabis research and drug development. We have been able to do this faster and more efficiently than seen by most of our fellow researchers. Even with all of these achievements, we understand there is still much work left to be done. Navigating the regulatory landscape of domestic and global markets is one of the most challenging elements of operating in this space. Yet we continue to forge new supply chain networks and create new pathways for product distribution globally. From a financial standpoint, we're optimizing our expenses and cash outlays while keeping our focus on our financial disciplines. To that point, although not required to do so, I will note that today we file financial statements with the SEC on a timeline commensurate with a US-based company, which I believe is a testament to our team and their dedication as we move away from being classified as a foreign private issuer. We expect our strong growth to continue through the back half of 2022 and beyond. And as such, we are reiterating our revenue guidance of $35 to $45 million for 2022. A sincere thank you to our customers, our shareholders, our board of directors, and the entire Flora team. I am confident in our current position and our ability to take advantage of the opportunity before us. And with that will begin the Q&A portion of our call. Jesse?
Thank you, Luis. All right, well, now we will begin the Q&A section. Please submit your questions into the Q&A chat that we have running on the webinar. We will do our best to answer as many questions as possible, and we'll get through what we can. We appreciate everybody participating. So to begin with, Luis, what is our M&A strategy? Can you reiterate that for everyone?
Yeah, we highlighted during the call that the industry is going through a period of consolidation. This is happening for a number of reasons: the deterioration on the capital markets, the inability for some companies to have access to cash, or wanting to have access to companies that have the resources to amplify their reach. With that being said, there are many opportunities out there that could help us amplify our distribution, our human capital, and our capabilities. So going forward, Flora will continue to evaluate M&A opportunities. We certainly are going to play a stronger emphasis on companies that are revenue generating and EBITDA positive, as those types of companies will strengthen our balance sheet and our financial position. But we're also looking for companies that once again enhance our human capital capabilities and our potential for realizing a cash flow positive performance over the short term.
Thank you. One question we have is from Flora Gems. Apologies if I'm mispronouncing anything. Are you required to raise money as the cash balance is only $10 million at the end of the year?
We're not, as was highlighted on the call, and I'll allow Elsha to complement this. We have a path to profitability with our current structure, It's important to highlight that the company has no debt as of today. We expect our cash burn to significantly reduce over the second half of this year, and we expect to become cash flow positive early next year without having to raise any additional capital. Elshad?
Thank you, Louis. Yeah, I can complement that. We will continue to manage our cash diligently. This will include our corporate initiatives to reduce and optimize our costs. As we noted, we already completed all our capital expenses, so we will see very minimum capital investment. We'll be focusing on turning our inventory to cash, optimizing on synergies, capturing the revenue, which altogether should allow us to maintain debt-free position, as well as reduce our cash burn significantly for second half of this year.
Thank you very much. Can you, this is from Marla, can you provide color on near-term priorities in terms of growth and consolidating operations?
Yeah, I'm going to give Jason an opportunity to speak, as well as Dr. Annabelle, but I'll start. From a consolidation standpoint, we have fully integrated our acquisitions of Just CBD and Vessel. I'm speaking today from our San Diego office where our Vessel team stands, and we're very excited about the synergies and realizing the potential of those synergies over the short and long term. It's important to highlight that we just acquired Just CBD 6 months ago and Vessel less than a year ago. And we have been able to incorporate these teams at a very rapid pace. And that will be seen in terms of revenue contribution and synergistic opportunities over the second half of this year. But in terms of growth opportunities, it's a balanced approach. From a house of brands perspective, we're going to continue to amplify revenue generation there, as it's a tried and true and proven channel. And we have an opportunity to enter more markets as the regulatory framework for CPG products is less restrictive as that of the other two pillars. But we're very excited of opening up revenue contribution and fully start to realize the investments we have made on our wholesale and commercial infrastructure, starting with the activation of our cultivation this year. So I'm going to pass that to Jason to talk a little bit about the activation of Cosechemos and Flora Lab 1.
Thank you, Luis. I think I get so much. We operate so much in silos sometimes. It's hard to, maybe it's good to expand the conversation. Flora's original quota was based entirely on derivative products, as it was not legal to export flower of any sort from Colombia until April 1st of this year. So Flora's previous quota, as well as the time during that before, we were cultivating cannabis for and 100% to be used in derivatives that would be exported under those terms. Only this year were we able to, once the quota and the law was passed, we were able to actually begin planting flower for export. And to be fair, the majority of the export to the world is still done by flower. So that the Israeli markets, the German markets, the Australian markets are still primarily looking for flower. So Flora had to this point been cultivating cannabis and high CBD strains intended for derivative products in other markets around the world. Only April 1st is when we began specifically cultivating for flower, which is a totally different market that's open to us now. So as Luis alluded to, with that change on April 1st, we've now been able to move all of our genetics that we want to move to flower. And again, there's many different types. Some CBDs up to 1% THC for the European markets, others for North American markets much lower, higher THC for some markets. And there are caps in certain markets where our genetics are tailored to fit those different categories. So this is all now just coming online because it wasn't legal for any cannabis cultivator in Colombia to export flower until just now.
Yeah, so I'll summarize that we're very excited about the initiation of exports of dry flower, the initiation of exports of derivatives out of Flora Lab 1. And of course, we're also activating our life sciences division, albeit the contribution will be small, but we're very, very enthusiastic about the potential that cannabis will have in the pharmaceutical grade space. And I'll just perhaps ask Dr. Annabelle to provide some comments around the life sciences pillar.
Yes, for sure. Thank you, Luis. I'd like to quote my colleague, Jason Warnock, who always says, the first time we are doing something is the first time it's ever been done. And it's so true, especially with our life sciences pillar, is where a lot of what you see in medical cannabis has completely voided out the preclinical side that actually gives medical cannabis its credibility to be able to move into a pharmaceutical product and into the hands of providers to be able to create prescriptions. We're doing what we're doing so that we can actually put claims behind the products that we put to market as medicine. Of course, right now, a lot of products on the market that you don't really get a lot of guidance when it comes to medicine. So the clinical trials that we're doing are the first of its kind. We were able to partner with the University of Manchester. We did all the preclinical work within 6 months. That is all complete. So that's in cell studies, in animal studies, metadata analysis. If you know that world, that can usually take anywhere from 5 to 10 years and cost over $10 million. So we've been able to do it in 6 months, and we're turning some heads by doing that. And we expect to be in patients by the end of this year. It's all in the hands of the NHS, which essentially is the FDA of the United Kingdom. But we're really excited about that. Also in Colombia, taking advantage of the fact that medical cannabis can be paid for by health insurance providers. So we have a custom formulations lab, also called FL4, as I had mentioned, and we're targeting 6 different products for 6 different conditions that will be prescription based only. So we're really shedding light on filling that gap that is truly the medical cannabis space, so that we're taking our time and doing the due diligence to put cannabis on the map in the right way. Thanks.
Thank you, Dr. Annabelle. Okay, moving on to a question from Aaron Gray from AGP. You mentioned exporting to Germany, Israel, and Australia in the coming months. Can you speak to whether this would be extract or flower, and how you are progressing in terms of flower cultivation and THC levels being achieved? I think you touched a little bit on this, Jason, but if you could shed just a little bit more light, that would be helpful.
Oh, sure. You want me to start off? Excellent. So as we said, most of those markets actually can take both products. But the truth is, with our current licensing, as well as our certifications, our GACP product can go into many, many nations that are looking for different products of that category of dry input. So most of that will be predominantly flower. To be honest with you, most of our Flora Lab 1 production, we convert to distillates and isolates that are used within our internal supply chain, our vertical integration, if you will, as well, because we touch so many different areas within our ecosystem. So most of our exports in the short term are directed towards, in those markets, certainly Israel, Germany, and Australia, are towards flower. There are other markets that we're looking at continuously, and we continue to update that daily on what we can produce for certain segments, whether they be distillates or isolates. Primarily, like I said, that's mostly internal today. Most of our focus is on flower. We have different categories of genetics for different markets. Certainly, we see our genetics reaching up into the high 20s, as well as specific ones that are, like Israel, can have more than 24.1%. So there's some that are specific to markets, and others that go a great deal beyond that.
Great. Thank you, Jason. Now we have one from Scott Fortune of Roth. Can you provide color on the Colombian grow and look at the THC supply agreements and additional new global distribution as far as timing, and color on genetics and strains quality to sell into Europe, potential revenue mix for THC products? A little bit of a similar question, but I think some insights into our particular strains and genetics here would be helpful.
I'll start with, let me start, Jason, I'll allow you to complement. So I think to reiterate some of the messages that we have delivered on this call, we currently are growing 8 hectares of land of our 100-hectare licensed cultivation facility. 5 of them are high THC strains. 3 of them are high CBD strains. The agreements that we have today are the demand that we have for the product on both THC and non-THC strains is exceptionally high. And we have already started shipments to some of our clients in Europe and beyond. Now, as was mentioned also in the call, some of these shipments are being done for the first time, meaning that the time it takes from getting the regulatory approval to ship that one first shipment, getting the FNE, which is the narcotics fund that evaluates your ability to move products from Colombia to other parts in the world is being done for the first time. It takes some time to get all those approvals. And we expect that the timing from an order being generated to delivery to move from 90 days to 60 days, and then obviously optimize over time. In terms of genetics, I would like Jason to highlight our current strains and the ones that are currently that are in development.
So currently in cultivation harvest, there's 2 high THC strains and 2 CBD strains that we're focused on. Both of them, like I think I mentioned earlier, up to nearly 1% in one of THC for one of our CBD strains and one of a little bit lower, in order just to make sure we can accommodate all markets. And again, from derivatives and isolates, that's actually a better choice as well. So we don't have any remediation. And then when it comes to THC, we're doing all of our THC strains in the initial ones are targeted to that under 24%, so that we can target the Australian and Israeli market. Later this year, which we already have working through, is our balanced strains, so like a 1-to-1, a 10 and 10, as well as a very high THC strains, upwards of 29%, which we targeted more for the German and other markets. All by the fourth quarter. So the other ones are being harvested now. By the fourth quarter would be the last 2 strains I mentioned.
Great, thank you. I'm going to follow on question from Scott. Can you provide a little color on the broad range of 2022 guidance from 35 million to 45 million, and the mix that would be coming from US CBD, meaning just CBD, and Vessel? A little more light on what is factoring into this range.
Yeah, I'll start, and then I'll have Elsha to complement. Well, first off, I think the variability, the broad range, is directly related to the industry in which we operate. We highlighted in the call that approximately 85% of our revenues are coming from a house of brands, and our top 2 brands from that portfolio are just CBD and Vessel. So that is the contribution for the first half. We certainly expect the contribution from commercial wholesale to significantly improve over the second half, as we're starting to export dry flower and export derivatives, albeit is going to be smaller on the derivative side due to the reasons that Jason explained.
Yeah, I can complement that. We definitely would see some percentage change, which is currently 85, 12, and 3. I think we will see somewhere that depending on the operationalization of our revenues for life sciences and cultivation, I can see that percentage contribution coming down to 60 to 75% range. But again, we're not providing guidance. This is a new operations. As we build up those capabilities, we definitely would like to accelerate revenue. At the same time, we definitely want our house of brands stay as a strong performer. So it's still delivering to both the top and bottom line.
Great, thank you guys. And this question comes from Adam Williams from CBD Intel. What are your thoughts on the likelihood of the approval of the recreational cannabis legislative proposal in Colombia?
It's very likely. Senator Gustavo Bolivar is the author of that law. I've been in multiple discussions with the senator regarding the contents of the bill, and it makes a tremendous amount of sense for Colombia. The purpose of the law is not only to legalize cannabis for recreational and adult use, is to provide some social relief to communities that have been disproportionately affected by the war on drugs. And there's no country that has been more affected than Colombia. And this law specifically will also encourage the support of small and medium companies, as well as support Aboriginal communities in Colombia. So we feel strongly that the law is going to pass. Senator Bolivar, it belongs to the party of President Petro, who was newly elected, and they hold the majority in Congress today. We firmly believe it's going to be part of their first 100 days agenda, and it will get passed pretty swiftly.
That's great news. We've received this question from a number of people. So when does Flora expect the stock price to turn around?
Yeah. Well, thank you for that question. I will highlight we will continue to execute on the fundamentals of a well-operated business. I think it's important to highlight, and I did so at the end of our call, our financial discipline and our operational excellence continues to improve on a daily and weekly basis. It's reflective on the fact of the timing on this reporting. We expect to continue to give consistent, accurate reports that are in line with a US-based company, and that will ensure that investors are appropriately informed of the improvements that we're making. And as such, as they receive information like they are today, they'll be more likely to invest and hold in our company. We certainly believe that we are developing a strategy that is sound, that is going to take us to a product of profitability over the short term, and in turn, investors will buy and hold the stock, and the share price will appreciate.
A follow-on.
Yeah, and let me add, as you all know, we are obviously exposed to systematic risk. We are exposed to capital risk, to exogenous factors beyond our control. However, in our sector, within our group, we would like to aim ourselves to be best performer in terms of our operational execution, ability to integrate newly acquired units, and ultimately focusing on customer, which allows us to amplify shareholder value on long term. So that's a way we are positioning ourselves in order to minimize our exposure to market, which again, we will be focusing even during these difficult times on our operational execution, cost management, delivering results which we promise to our shareholders.
Fantastic, thank you. This comes from Steve Silver. You mentioned that Flora has completed its CapEx for 2022. Are there any major projects envisioned or requiring capital allocation for 2023?
Not at this time. We have fully deployed our capital expenditures. The majority of them, there's some very, very small investments that are being utilized to finalize the build out of our Flora Lab 4 facility that Dr. Annabelle mentioned during the portion of her presentation. But we are moving into a period of execution. We're realizing the investments that we have made over the last couple of years. It is important to highlight that we have made those investments strategically and in line with the demand that we expect to see over the next couple of years. So if demand accelerates dramatically over the next 18 months, and then we will reconsider our current CapEx budget. But as of today, based on our revenue projections, we are not deploying any more CapEx resources or see any major projects into 2023.
Okay, thank you very much. One question here, it looks like it's from Anonymous, so I apologize, I don't have the name. Will you be working with any micro cultivators or processors in Colombia?
Yes, we are, and it's important to highlight we just announced a press release a couple of months ago that highlighted a partnership that we signed with the Misak community. The Misak community is the largest native community, native tribe of Colombia. They're located in Cauca, which once again has been a department of Colombia that has been dramatically impacted by the war on drugs. This community is led by a woman called Mama Liliana Misak, which is an incredible entrepreneur that wants to move forward her native community. Currently is a license holder and is growing cannabis, and we're gonna help Mama Misak not only develop product portfolio, which we are experts at, but also transform her flower and export her flower into other countries internationally, which of course those communities don't have the capabilities to do so. And we certainly believe that that is the pathway for small cultivators in Colombia to have to reap meaningful economic benefits in the cannabis industry.
Great, thank you. Another question, this one looks like it's from Anonymous, but I've seen it pop up a couple of times. Can you highlight maybe the top 2 or 3 challenges that you see Flora facing across the back half of the year and into 2023?
Sure. I'm going to pass it over to Holly, since I'll highlight that Holly Bell is our VP of Regulatory Affairs. Once again, she was the head of cannabis for the state of Florida, and joined us just a couple of months ago. So Holly, would you care to answer that question for us?
Could you repeat the question for me, please?
Yeah, what are maybe the top 2 or 3 challenges that you see Flora facing across the back half of 2022 into 2023?
Certainly it would be dramatic changes in the regulatory environment that we can't predict. And so that would be the biggest challenge I would see coming. Don't see anything on the horizon, but again, that's kind of unpredictable as our elected officials get into session.
Yeah, thank you, Holly. And I'll complement this. So yeah, absolutely. Number 1 is regulatory. I think there is a big difference between what our government elected officials say they're going to do and the time in which they do it. And also, even we've seen now that even as regulatory changes that have been implemented, there's a level of hesitancy that we're seeing from the various organizations that control cannabis trade, and it's going to take some time for these organizations to become comfortable with exports of cannabis, with exports of dry flower from Colombia into other countries across the globe. That's going to take some time, depending on how comfortable these 8 entities and agencies become. Then the risk will start to alleviate. The second one is supply chain driven. The supply chain for cannabis products and derivatives is extremely complex. There's only a handful of freight forwarders or logistics operators that are willing to work with cannabis companies today. And we are experiencing those challenges. We certainly have included that risk into our revenue projections and our financial projections, but there certainly are meaningful out there.
Luis, could I add one more thing to that?
course.
One of the things that we will see, and Luis touched on this, is we're doing this for the first time. This is a process, and anytime you're doing something for the first time, it takes time and it presents some challenges. We've personally experienced that at Flora Growth, but due to our great relationships and our proactive approach, we're figuring out how to do that very effectively.
Great, thank you. A question here from Chuck Wolf. What is the process you have in place to make sure you don't grow too fast and that with existing growth, you allow the necessary infrastructure to stabilize?
Yeah, I'll start. It is demand-based growing operation, and that means that you compromise over the short term in terms of speed to delivery of that market, but we're being very careful in not overplant. We have seen what has happened in North America, specifically in Canada, hundreds of tons being burned and going to waste, or inventories being marked down inclusively inside of Colombia. So we're only growing based on the demand that we are expecting to fulfill over the short term. As the supply chain continues to become more predictable, then we're going to be able to optimize our growth, as well as optimize our time to delivery for those orders. Jason?
I was going to say that's a great way to put it, Luis. I think that we are continue to be very cognizant of where our demand supply and our demand forecasting is today and where it will be in 2023. We have the capacity and the ability to expand dramatically, but just because it's there doesn't mean we should exercise that. So to Luis's point, we're very cognizant of building infrastructure, both to support it domestically and within our vertical supply chain, as well as meet future demand. I have no doubt that as the larger companies and countries around the world start to begin unlocking some of these kind of regulatory challenges, like Holly had mentioned, we will increase demand commensurate with that opening. Increase production.
Great, thank you. Another question here from Aaron at AGP. So we spoke to the synergies following the acquisitions, particularly on sales channel synergies. Could you provide color on where you see these sales channel synergies and when might they be realized?
Yeah, they're starting to be realized today. There's a number of examples that we can highlight. We started accelerating revenue generation internationally. That is one of the capabilities that JustCBD wanted to acquire from a company that is positioned to be a global distributor. We're starting to just amplify revenue distributions in those channels, specifically in the European Union, and I think Jesse mentioned that revenue contribution from international sales is approximately 3%. That contribution will increase dramatically. We also launched Vessel brand, which had been traditionally a DTC brand. Over 90% of revenues came from a direct-to-consumer channel, to retail, wholesale, smoke shop and vape channel, which was the bread and butter of Just CBD. And we are seeing significant growth from that channel launch. We're going to continue to amplify revenue contribution on both of those channels, but the synergies go beyond channel distribution and channel sales. They also attach to the way we are fulfilling the supply chain for our consumers. We're leveraging both East Coast and West Coast warehouses. We're also identifying white space opportunities and developing brands that go to market and will be launched here in the second half based on the intelligence that we're garnering from both of our major brands. And the fact that we have a global reach allows us to understand what is happening with the consumer sentiment out there, what is the wider space opportunities in terms of product innovation, and we're able to go to market because of the synergies that we're starting to realize from those acquisitions.
Great. Couldn't have said it better myself. We have just a couple minutes here, so I'm going to try and get through two more questions. This one comes from Joey Hazenfield. Are there any thoughts or plans in opening direct stores in the U.S. markets? I think brick and mortar stores, it would be Flora specific.
Yes. In fact, we are currently working on a concept development store in Miami. This store was a pop-up location for our Stardog brand, which was our hemp clothing brand, that is now morphing into our entire concept store that will highlight our entire product portfolio. And that this will be used to provide access to consumers, to more mainstream consumers, to our entire portfolio of brands. We're going to evaluate this as a pilot and understand if there is a good reception on this type of format. And if the format is successful, as we need to be cautious in terms of investments, then we'll scale them down. We're going to start with that one location in Wynwood in Miami, Florida.
Thank you. Okay, the last question, sort of an amalgamation of a few questions I've seen come through, but I think the growth pillars are fairly clear and straightforward. We have our commercial wholesale, we have our house of brands, we have our life sciences. As you look at category operations, so whether that be consumables or hardware or prescription grade pharmaceuticals or commercial, where does Flora see the most growth happening in its broader portfolio of products?
I'm gonna allow my team to answer portions of this question, but it's a matter of timeline. I think over the short term, we have a very clear path to profitability, and the reason why we're there at this point is because we invested in a house of brands portfolio. Brands allows us to have a meaningful connection with customers and communities. They have a high margin profile. They allow us to control our own destiny, and they have a lower regulatory framework than the other two portions of our strategy. For that reason, we have been able to accelerate meaningful revenues and have that exponential growth. And of course, is both organic and paired with a meaningful M&A strategy. The potential of dry flower cannot be understated. Almost 50% of the global cannabis trade is done in dry flower. We're just starting to export dry flower. We have the ability to grow flower with high quality at one of the lowest production costs in the world. And I will reiterate, we don't talk about this too much, but we're growing cannabis at 6 cents per gram of dry flower. The spot cost of a gram of THC is about $11 in Europe right now. So the idea and the potential to fulfill a European or international market with high-grade product out of Colombia that has a significantly low-cost structure has tremendous potential. Now, there's risks inherent with this specific pillar. The regulatory risk that we highlighted and the supply chain. It's going to take some time. But once we get there, I think the tremendous flow is going to be meaningful. And I left life sciences for last because I believe is the one that has the most meaningful potential over the long term. The possibility to replace opioids, which there are 300 million prescriptions that are being served to consumers today, to patients today, and replace those with plant-based medicine that is non-addictive, that is safe, that can help the ailments of millions of billions of patients worldwide. That potential is yet to be realized. That's why we're investing in life sciences, because we believe in the long-term potential. And thankfully, we have Dr. Annabelle Manalo leading those efforts. But we certainly believe that over the future, cannabis will play a meaningful role in pain management, in anxiety management, in as well as insomnia. I'm gonna let my team answer the compliment that. So why don't we start with Dr. Annabelle?
Yeah, sure. I'm always saved for last, so thank you, Luis. It's really some big shoes to fill leading life sciences, because there's so much potential. You hear clinical trial and you're like, ooh, okay, you're going to give patients cannabis and they're going to tell you they feel better. As I had mentioned, we're doing things in a more traditional manner, and creating data in ways that is actually very untraditional to our current cannabis protocols. So for instance, in the UK, we're not just asking patients from 0 to 5, how do you feel after utilizing cannabis? We're actually utilizing a proprietary measurable pain data mechanism where we can actually see through live feed where the pain comes from and how the pain is relieved once the patient uses our cannabis. It's about treating a patient for a patient, and that's what plant-based wellness really is, opposed to just giving the same medication to everybody that has pain. And it's also about relieving medicines from the toxicities that historically we always see. One medication causes another kind of condition and or disease. Our recent preclinical data shows that at 5,600 milligrams per day, a mouse, which is still traditional science, could not overdose on CBD or on any cannabinoids that we gave the mouse. So 5,600 milligrams per day is way overdoing it. But the potential there, we're showing the safety, the efficacy, something that your FDAs would really look for. The potential there is to get into other countries. There are still a lot of countries that are very conservative about cannabis, but they're starting to look into it. They'll look into it if we've done the science. That'll be a lot of countries, that's their first kind of chance that they're going to give the cannabis industry, is a product that has studies behind it to prove that it's safe. Okay, we'll start there, we'll try there. And then it's a domino effect. This can open up into a whole ton of over-the-counter products, and then of course lead to many more clinical trials. Last thing is that our current clinical trial, and just to show you how the protocols within plant-based medicine can be very diverse, usually you'll do a clinical trial, you study cancer and see if the cancer increases or decreases. In this clinical trial, we're studying fibromyalgia patients. So we're studying inflammation, pain, chronic musculoskeletal pain, but we're also looking at quality of life. We're looking at anxiety, depression, and we're looking at the patient as a whole. And I think that's what really makes life sciences very special. It's more than products. It's more so about treating a patient for a patient and getting an amazing outcome that's not toxic and very safe.
That's great. Thank you, Dr. Annabelle. I'll jump in quickly from the House of Brands perspective when we're looking at growth categories and highlight something that we touched on earlier in this call, which is, our real value proposition of the House of Brands is our access to our consumers and our ability to gain consumer insights and be able to act on those insights quickly. And as an example, I would highlight something that we did this year at Just CBD. Within 90 days, they evaluated the market, identified that alternative cannabinoid vape products would represent a meaningful growth sector within their product portfolio. They developed that product and brought it to market in 90 days. And so when we think about what our opportunities are and what our sort of growth categories look like, especially from the House of Brands perspective, we are able to accelerate that timeline, take advantage of trends as they come online. So I could tell you today that, alternative cannabinoid vapes is our key, growth market today. And in a month that may change and we can activate on that and have product in market before the end of the year. So, I think our strength is really our speed, as well as the diversity of our product offerings. So we can capitalize on those trends as they come and go. And we're not so heavily reliant on any one channel, any one brand, any one product offering for us to be able to deliver on our promises that we've made here today.
If I could, maybe, and I'll just pick up the commercial end of this question. I think the interesting thing about Flora, and I've said this many times before, so often the initial thinking of how cannabis economies would work, there was this rush to build infrastructure, there's rush to put capital into massive facilities, rush to put all these things out, and then eventually there'll be a regulatory change that happens, and we'll all get rewarded for that. Well, Flora took the opposite approach. We can make meaningful house brand activation in the US, even as a NASDAQ listed company today. And we went and made the steps necessary to do that. Even from the commercial side, we can still build infrastructure and to the point where we can activate in many sectors in the world that were not available even 6 months ago, certainly not available 2 years ago. But we didn't have to wait and invest capital and wait on a return that may or may never come. The company was able to immediately understand that there are multiple levels of consumers and ways that we can access the market. I think Flora's approach to shifting revenues as we continue now to this infrastructure to come online and start to reap those initial benefits only gives us more opportunity and more runway to fully integrate and reach more markets than ever before.
Beautiful. Well, we went a little bit over, so thank you for everybody who's able to stay on and finish this out with us. We appreciate everybody's time today. Thank you.